This is the Brave New Coin Crypto Conversation, hosted by Andy Pickering.
Hello everyone, Andy Pickering here. I'm your host and welcome to the Crypto Conversation, a Brave New Coin podcast where we talk to the people building the future in the blockchain and cryptocurrency space. This is our very first podcast, and I'm delighted to be joined by one of my Brave New Coin colleagues, Mr. Andrew Gillick.
Hey Andy, great to be here. Honored to be on the first show.
Welcome aboard. Now look, Andrew, you've put together 2 investment thesis reports for Brave New Coin, and I think they do a really good job of speaking to some of the issues that the world faces today. I'm talking about increasing concerns around privacy and data use, fake news and the weaponization of social media, negative interest rates, the effect on the economy, and this new conversation around modern monetary theory and what this all means for Bitcoin. So I'm really excited to dig into all of this, but before we do that, Andrew, perhaps you can introduce yourself. I want to hear a little bit about your background and what led you to Brave New Coin.
Sure. I write, as you said, investment thesis for BNC and drawing future perspectives using our data and trends to pick out investment opportunities in the blockchain space. I came to the industry through financial journalism. I was lastly a director of business at the New Zealand Herald, and my interest in blockchain in particular was piqued as someone who's grown up and graduated during the global financial crisis in Ireland and saw the damage socially and economically that a debt-based system wrought. So I could really appreciate the need for something like Bitcoin when I stumbled across it as an alternative to the monetary system that we have now.
Fantastic. Let's talk about your first investment thesis then, Andrew. It's called The End of Cash, Investing in Digital Privacy and Scarcity as a Hedge Against Negative Interest Rates and Modern Monetary Theory. Now, essentially with this report, you're making the case for crypto, and I think specifically Bitcoin, as a hedge against the chaos of the modern world. Is that right?
Yeah, it's a mouthful of a title, but the gist is pretty simple that using digitally scarce assets and also privacy coins like Monero and Zcash are potentially a great way to hedge against this volatility that's happening in the world and the encroachment of privacy and data that is only going to continue from governments and from big tech.
Look, I couldn't agree more, and I think the backdrop here is, you talk about how the world is moving to a sort of cashless state, or we're moving to a cashless society, and there's this sort of struggle emerging between who controls money at a time when both corporations and individuals can now create these new digital currencies, right? And that's like a threat to the status quo. So, well, what's going on here? Cash is disappearing. We know India is mostly cashless. Sweden is mostly cashless. The Australian government wants to ban cash transactions over, I think, $10,000. And we saw last week that local Bitcoins have removed the ability to make in-person cash Bitcoin trades on their platform as well. So why is it that governments and central banks want to remove cash from the system?
Yeah, you've hit the nail on the head with all those points, and it's really unfortunate that local Bitcoins were the last to remove that cash option. It's a natural process in many ways to move to siphon cash out of a system when everybody is using credit cards, debit cards, but also new ways of paying on mobile apps. It's in China's basically cashless in a way. Most transactions are done through WeChat and Alipay and that kind of thing. So it's only inevitable that it will move west. And governments are also incentivized to remove cash from the system, as it's the last form of privacy that people have, fiat privacy. And it's my thesis is that coins like Monero, Dash, Zcash, coins that have either privacy options or are built to be fully private, will become the new digital cash, as it's going to be harder and harder to get regular fiat cash through the system. And central banks in particular would prefer to see cash gone from the system, and also governments, because it helps people avoid tax, it's AML, all that kind of stuff. And it's been done in such a way that cash is being siphoned out of the economy in such a way that governments are making it sound like a good thing. You know, it's convenient for merchants because cash is actually more expensive to handle and a lot more labor intensive than, even though, credit cards, even with all their fees, are actually cheaper to accept in the long run than most cash transactions. So, and then for consumers, it's very convenient. You only have to do is wave your phone over a POS terminal. And then the banks are also trying to, hold on to the last bits of power that they have, I suppose, or the last, trying to defend the last moat that they have with customers at point of sale by joining forces with Apple and Google and creating those Apple Pay, the Apple Pay on your phone. So in those transactions, you've got three big players. You've got your big retail bank, you've got MasterCard, and you've got Apple and Google. So they're, fortifying their position. Whereas central banks, after years of seeing the credit cycle amplify the business cycle, they would rather see cash taken for several reasons. Some are legitimate, some are hyperbolic, but in general, there's the natural evolution of cash being phased out of an economy as people prefer convenience of paying on credit cards and iPhones and iWatches and that kind of stuff.
Does that provide a good use case for the so-called privacy coins like Monero?
Yeah, that's exactly my thesis, is that the privacy enabled coins and the ones that are built purposely just for privacy like Monero will become the digital cash, as cash at the moment is the last bastion of fiat privacy. And when that's gone, there will certainly be people will be, it's not like people are just going to give up their privacy. They're going to look for other options, and the most natural thing would be to look at digital currencies.
That's right, because there's a pretty big I don't know what you call it, the dark economy or the black economy. It's big, right? Yeah.
I mean, that'll never go away, and it's, that's what governments try to do. They try to bring stability on absolutely everything and try to, to concentrate their power on bring everything into some sort of equilibrium as they see it. But it doesn't, world doesn't work that way. So people will find other outlets, and obviously they have been doing for all of humanity. So we will be shortly seeing cash gone from all society, and the last option will be, even though Bitcoin is pseudonymous and a lot of other currencies are pseudonymous, the privacy coins will certainly become the new digital cash, and could see a lot of upside in those.
Sure. Now, the other side of this, Andrew, is this idea around negative interest rates. I saw a business survey in Australia last week saying that their retail sector was now clearly in recession, and this took place 1 week after the Australian Reserve Bank was forced to cut their interest rates, I think, to the lowest level in history. Is that right?
Well, yes, both New Zealand and Australia have cut their interest rates down to 1.5, I think it is now, and the lowest in history. The reasons being, the mainstream media won't really tell you exactly what's going on, but the reason being is primarily because credit is slowing in those economies, credit growth, that is, and the banks are extremely exposed to the private property market. And there's been a lot of speculation for years in the New Zealand and Australian property market. So the RBA and the RBNZ have brought the interest rates down to close to zero to keep the credit cycle going, to keep asset prices going. And because if the property markets crash, it's no good for the rest of the economy.
No. And
it's the same all over the world. You see interest rates in Europe just barely above zero. The States got it up to, was it just 3% in the quantitative easing cycle, and then quantitative tightening cycle, I should say. And now they've had to bring it back down since they got it up to 3%, and it's back down to just over 2%, I think, at the moment. And that's been basically because the Fed and Trump don't see eye to eye on the issue of raising interest rates. But across the world, after each recession, the central banks of every country have brought the interest rates down in order to to stoke inflation and to get the economy going again. And each time they've been unable to get it back to the previous point that it was at, which is typical of, you know, a system losing resilience, is that it's very hard to get it back to the strength, its former strength. So each time the interest rates have come down, they've never regained their former high. And it's gotten to the point now where the IMF, the World Economic Forum, and the Federal Reserve in the US, among other countries like Canada's central bank, have all started looking at negative interest rates. So getting rid of what they call the lower bound, which is 0, and pushing interest rates into -2 and negative potentially 4%, which would mean that, unlike the last recession where interest rates did actually go to about 0 and sometimes even below 0, the retail banks didn't actually pass on those negative interest rates to customers on their bank deposits. But this time, in the next recession, if interest rates do go to -2 and -4%, the retail banks will have to pass on those negative interest rates to customers' deposits. So that would be, it's to incentivize people to actually spend their money rather than hoard it or keep it on deposit, like what happened in Japan during their big deflationary bust in the 90s and 2000s. People actually hoarded cash at home, didn't spend it. So that's what that's the situation they're trying to avoid, is this Japanification, they call it.
Sure, and I guess, today people have, in the old days, they could hedge using something like gold. But of course now they have the option of Bitcoin. But at the same time, anyone can effectively create a digital currency now. And you talk a lot in your report about what's called a central bank digital currency. Can you just tell the listeners what a central bank digital currency is? What does that look like?
Yeah, sure. So my thesis is that, as you said, we're in an unprecedented moment in history where people, individuals, companies, governments, and corporations can create their own form of currency. And a central bank digital currency would be obviously something that is issued by a central bank. It's on a distributed ledger technology like Bitcoin, but
so it's still on a blockchain, right?
Yeah, the few that have been experimented with and talked about, such as the Riksbank, the Swedish central bank's e-krona, which is their digital currency that they're researching at the moment, that would be on a distributed ledger. And the money that would be, say, in your bank account with your retail bank, as you would think, the money would actually be on the central bank's ledger rather than on your retail bank's ledger. So at the moment, the interest rates in Sweden are actually -1%. And some banks, I'm sure, pass on they pass on the negative interest rate, but other banks in Sweden, yeah, I'm sure have different rates of interest that they'll have on their deposits. But if the e-krona was implemented, it would mean that all all deposits would have -1 interest rate on the retail banks. So yeah, so that's one of the examples of a central bank digital currency. It just operates in the complete antithesis to something like a permissionless cryptocurrency,
which would be Bitcoin, right?
Yeah. So the way we're looking at it is that there'll be 4 traits of digital currency in the future. Currencies that are permissioned, official, and unofficial. And the permissionless cryptocurrencies that are official would be things like Bitcoin. And when I say official, things that are obviously, semi-regulated. They are regulated to a point and acknowledged by, the Bitcoin's been acknowledged as a virtual currency from the CFTC in the US, and it's been declared as not a security and that kind of thing. So in a sense that is an official currency, and it's got a lot of official backers. So permissionless official currencies would be crypto commodities like Bitcoin, even Ether, and Litecoin, those kind of things. Permissioned currencies that are official would be central bank digital currency and corporate digital currencies like Facebook's new coin, which is coming out this week, and JP Morgan's coin. And then you've got unofficial currencies, unofficial but permissioned currencies, which are things like XRP and US dollar Tether and other similar stablecoins, US dollar stablecoins.
Andrew, you mentioned there Facebook's much hyped and long-awaited blockchain project, which up until now I think we've been referring to it as Project Libra. What we do know so far is that, you know, the project has backing or buy-in, if you like, from the likes of MasterCard, PayPal, Visa, Uber, and a lot of other, I guess, blue-chip brands who are each paying something like $10 million each to run a node, and presumably that gives them unfettered access to the transactional data, right? What's your hot take on Facebook Coin? This is a massive project with who knows what's going to happen, but it's pretty exciting, right?
It depends how you look at it. Exciting, I wouldn't deem it, but it's huge, definitely, and something that was, you know, inevitable from very, very early on, because Facebook's whole revenue model it's completely stuffed up, and they are going to face a lot more regulation in future, and the ad revenue business model that they've been thriving on for the last few years is going to be disrupted by regulators and antitrust laws. So they're looking for another option and another revenue stream, and one of the biggest, hottest markets at the moment is the remittance market. So that's what they're going after, similar to XRP and a few others. It also enables them to sell things directly on their platform. It makes it easier for people to buy tickets, I suppose, on Facebook, through Facebook, and pay for events, all that kind of stuff. And also on Instagram, they'll also be able to buy things directly from retailers. And it's incredible that they've got Uber, Visa, MasterCard. I just heard about that recently. Huge clients. I have no idea how that all comes together, and I don't know exactly what that will look like.
I don't think anyone knows what it looks like yet, but the idea that if you extrapolate out a year or two, you can see that this one company, Facebook, who, you wouldn't necessarily want to bet against them, but what happens if they can enable pretty much peer-to-peer payments amongst their 2 billion strong user case, and enable those payments across borders within their own ecosystem or not, with low transaction fees using one digital currency? Now, to me, that sounds a lot like the original Bitcoin use case, with, of course, the one caveat that this is not, despite I'm sure they'll try and sell it as decentralized, but it's not decentralized, is it?
No, of course, it doesn't fit, as Andreas Antonopoulos said, the 5 pillars of cryptocurrency, which I can't remember off the top of my head what they are, but, permissionless, public, open, and so forth. It doesn't fit any of the 5 criteria for cryptocurrency, and that it certainly isn't. And, people will be at pains to point that out to the public, but it's interesting that you've got MasterCard and Visa who are really hedging their bets and really trying to fortify their last stand against being made, I suppose, redundant in the future, and they being obviated by Bitcoin and better modes of transactions. And the big credit card companies are joining forces with retail banks to provide these paywave solutions, and they're joining forces with big tech like Apple and now Facebook to do whatever they're going to do with them to try and protect their position as well in the market. So they're really hedging on both sides against cryptocurrencies with big tech and retail banks. And the Facebook project sounds like it'll be a huge threat to retail banks more so than cryptocurrencies. They're going down the route of Alipay and Alibaba, that kind of thing. So, and Alibaba's Ant Financial is actually one of the biggest banks in the world. Not many people know that. It's actually bigger than Goldman Sachs as far as revenue. And Alipay, or Ali, whatever it is, their payment app, it's actually started doing lending. It's taken on in China. It's taken on the role of a bank. It's even been required by the central bank to actually keep fractional reserves. So it's basically providing the same service as a bank in China now. Well,
yeah, look, I think it's a really interesting one. On the one hand, you've got Zuckerberg. He's doing his Zuckbucks or LibraCoin, whatever it's going to be called, and it does have the ability to completely disrupt the banking model, I think, as you've pointed out, but at the expense of what? Is Facebook simply switching from using user data to shove a whole lot of highly targeted ads into your face now to doing something similar, but using your transaction data? What I think is also interesting is on the flip side of this, you've got Jack Dorsey, the head of Twitter, building on the Bitcoin blockchain directly through the Square app, right? So again, it feels like there's the battle lines are being drawn, and then you've got the Winklevi twins as well, who are, of course, Zuckerberg's old sparring foes right in the early days of the Facebook, when it was set up, and then they went down the Bitcoin rabbit hole, and their paths feel like they're converging again.
Yeah, it's yet to be seen whether Facebook really will, start getting into usual bank operations like loans and that kind of thing. And the market for digital decentralized finance is just starting to bloom. And I think I can't see Facebook really posing any threat to that. But yeah, there's obviously a lot of big guns now coming out, and Jack Dorsey, he's doing good things, I would say, for the industry. And guys like Zuckerberg, you just couldn't really trust at all, could you? And because the whole Web 3.0 model is inherently anti Facebook's business model, it pulls, it would pull the rug out from under Facebook's business model, because it would decentralize data. It would give people their own digital identity, their sovereign digital identity, and there'd be all sorts. There'd be and also the ad revenue model that they would have would be basically irrelevant, because you'd have things like the Brave browser, which pays publishers and pays people for their attention for viewing ads. So there's a whole load of better models emerging in the decentralized media landscape and Web 3.0.
Whether you're an enterprise fund manager or a retail trader, buying and selling cryptocurrencies successfully requires price discovery you can rely on. Brave New Coin's liquid indices provide trusted US dollar prices for Bitcoin, Ethereum, and Ripple. Featuring end-of-day or intraday outputs, you can count on the BLX, ELX, and XRPLX for accurate US dollar pricing for smart contract oracles, settlement price discovery, net asset valuation, and performance analysis. Visit bravenewcoin.com to find out more.
Okay, Andrew, I want to move on to your second report, but before we do that, let's just conclude this part of the conversation. So I want to get you a summary, your actionable insight on this thesis. It's called The End of Cash, Investing in Digital Privacy and Scarcity as a Hedge Against Negative Interest Rates and Modern Monetary Theory. And by the way, listeners, this is available for download from bravenewcoin.com, and we'll put the link in the show notes below. So Andrew, what's your key takeaway? What's the actionable insight from this report?
Well, apart from investment and trading strategies that we offer in the report, the bottom line is that we are looking like we're going towards a future of more money printing and further debasement of fiat currency, and to realize the inherent value in scarcity, digital scarcity, in things like digital commodity money like Bitcoin and Litecoin, and also recognize the privacy traits of some coins as a new form of digital cash.
In other words, real cryptocurrencies are a good hedge against the chaos of the modern world.
Yes, and also for people to recognize the differences between the new types of emerging digital money, which will be permissioned, permissionless, official and unofficial. So, between four different players: corporates, central banks, retail banks, and individuals. Yeah. Decentralized, yeah.
Exactly. I love it. All right. Now, Andrew, speaking of Bitcoin, which of course is the number one, the king, the original decentralized digital cryptocurrency, one of the interesting things about Bitcoin is its upcoming block halving event, which I think is going to happen May 2020, which is about the time when the next US presidential campaign is going to really start to be heating up. So Speaking of the US election, this thing, I think it's going to be a really highly charged spectacle of, pure political theatre, doublespeak, disinformation, meddling from the Russians. You've got Trump saying, no collusion, no collusion. He thinks the Mueller report totally exonerated him. This probably just emboldens Putin even more. So I think, the next US election, it's going to be wild, which brings me to the title, in fact, of your second report that I want to talk about, and that is Election 2020, the war on fake news and the opportunity for decentralized media. What's the thesis with this report?
Thanks, Andy. So the thesis of this report is similar to the way MMT is coming to the fore of the US presidential election. The war on fake news is also is going to be a huge political plank, and it's already proving to be a political basketball on both sides of the political spectrum, Democrats and Republicans, to break up big tech the way it is at the moment. And decentralized media assets could benefit from this big tech backlash, and some of them that are already providing a viable alternative to the centralized media that we have at the moment. And it could play a pivotal role in truthful information in this US election, as in the previous election we saw that Twitter, Facebook and the rest were overrun by fake accounts. So things like Steemit, basic attention token, Brave browser, the more developed, mature platforms now really offer an alternative decentralized source of information for voters.
That's right. And Andrew, I think it's fascinating how, when the internet first was being built out and, everyone was getting excited about the potential of the internet, and it was kind of sold at the time as, disrupting traditional media and empowering the individuals. And it did do that for a while, but then we ended up where we are today, or have been for the last few years, sort of the opposite situation where you have these big centralized players, Facebook, Google, Amazon, and we live in this algorithm-driven culture where we're all sort of pushed into our own unique little bubbles, right?
Yeah, in many comparisons, we are in something like the Gilded Age of the late 19th century, and that was when you had the Carnegies, Rockefellers of industry who really were oligopolies at the top of the food chain or the business chain. Yeah. And we're seeing that happen again. As you said, the internet started off as a decentralized platform really, and then it's been overcome by huge oligopolies at the top of every industry. So it's working against, in many ways, the interest. Some of the platforms are inherently working in conflict to user interests. Facebook is the best example, where its consumer is both the customer and the product. And there's lots of effort on the way. And in fact, the creator of the internet, Tim Berners-Lee, is actually working on his own decentralized version of the internet as well.
Is he really?
Yeah,
that's fascinating.
Yeah, I forget what it's called now, but he's also he's been pretty dismayed as to how things have turned out, and he's got his own project underway as well. So there's loads of obviously Ethereum is going to be the world computer and the basis of Web 3.0, and for a lot of this decentralized media landscape, it's already the kind of reserve currency and reserve platform. So yeah, there's a lot of potential in the short term for digital decentralized media assets to really get an uplift from the war against fake news and the backlash against Facebook. And when people start to realize that Facebook's digital coin is not decentralized, it's not decentralizing the platform at all, it's actually consolidating. It's just an overture to blockchain, but it's actually consolidating its protective moat, its privacy moat, its IP moat, and it's really the complete opposite to where we want to go.
Looking for near real-time crypto asset spot rates for everything from Tron to Monero or Doge to BNB? Brave New Coin's GWA and MWA crypto APIs calculate a fair price for over 1,500 assets and 6,000 pairs across the global network of crypto exchanges. At 30-second tick intervals and available via streaming or REST API, Brave New Coin's GWA and MWA APIs deliver independent third-party price discovery you can rely on.
So what do you think, can you identify any potential tipping points or trends that are going to, help really usher in this sort of new decentralized Web 3.0? Because it's not something that can just happen overnight, is it? Ethereum, they want to build the world computer, but there's a long roadmap that sort of needs to be built out before the infrastructure is really ready to support those kind of values, aren't there? Isn't there?
There is, yeah. There's, as far as a tipping point, it will probably be more obvious it's always obvious after the fact, but a tipping point you could probably say is easier to pick when it comes to when a recession might kick in. But as to when a tipping point when people will start to migrate to Web 3.0 and realize that there's an alternative to Facebook, or there's a whole new way of using the internet, that will probably, in my estimation, will take a bit longer. You have to really show people the differences between the business models of a centralized entity that's beholden to shareholders to increase earnings per share every single year, and have a decentralized platform that has stakeholders but doesn't have a shareholder model as such, and the value is focused on growing the network as in the long term, rather than the short term opportunism of a centralized big tech company.
And I think, Andrew, people, we do care about this. We care about privacy. People care about privacy, and they're increasingly aware of, how much their data is being used in slightly nefarious ways. But the problem is people are also lazy, right? So you need to make it easy for them. And until these tools are made seamless, intuitive, and they just work, we'll get there. But Apple, I think, their new privacy sign-on feature that they've been talking about, that's a step in the right direction.
And I've heard Facebook is also trying to work towards a blockchain login portal.
That's right.
As well, yeah. And, that, again, I just don't really, I still just wouldn't trust them at all. I think it's completely besides the point. And there's going to be completely third-party independent platforms available where you can store your digital identity, such as Sphere Identity, where it'll be a universal app that you can store your most private documents very securely and auto sign up to any platform or any website that you want, and you don't rely on a third party as such. You don't have to trust in a third party. So you've got like politicians like Elizabeth Warren and Andrew Yang and these kind of guys in the election who are standing on the plank of breaking up big tech, and I think that could be those kind of guys, they could be a good barometer for the sentiment change towards a new kind of internet. And those guys are probably the ones to watch in terms of bringing about a zeitgeist change as such. Really Andrew Yang would be a huge zeitgeist change if he got into government, I'm sure.
Yeah, look, I like Andrew Yang. I saw him on the Joe Rogan podcast. He was a really interesting character. He's a smart guy, obviously comes from the Silicon Valley tech background, and I think his ideas around automation and how to combat that with the universal basic income, fascinating, and good to have those ideas injected into the debate. Look, I don't want to get too political. I think this is a good space to start to wrap up, Andrew. Could we finish on some hot take rapid fire questions?
Sure, Andy, fire away.
I want your hot takes. Take your best shot, Mr. Andrew Gillick. Where do you sit on the Bitcoin maximalist to multi-coin opportunist spectrum?
For store value coins, I'd be an 8. As far as diversification, I'd be 5.
Nice. Look, that leads me right to the next hot take question. Facebook's Global Coin, Libra Coin, Zuck Bucks, whatever it ends up being called, good or bad for the crypto ecosystem?
Facebook coin is not a cryptocurrency.
Fair enough. Andrew, if you could change one thing about the crypto industry, what would you change?
It would have to be the slow speed of transactions on the Bitcoin blockchain.
Which person, group or company is successfully applying the most leverage to crypto right now?
I would say the big on-ramp services like Coinbase and Circle.
Bill Gates famously said we tend to overestimate what we can accomplish in 2 years and underestimate what we can accomplish in 10. What does the blockchain space look like in 10 years?
That's a toughie. That would be interoperability, I'd say, between all the blockchains.
William Gibson said, "The future is here, it's just not evenly distributed." What's an example of the future being here right now, but most people just aren't yet aware of it?
Hoverboards.
A hoverboard's a thing?
Absolutely.
Look it up on YouTube. Let's zoom out. Andrew, what's the long-term future for the human race? Dystopia or utopia?
Cryptopia.
Cryptopia.
Not the exchange. Cryptopia would be a completely decentralized democracy.
Like it. And finally, Andrew, what is your favorite science fiction book, film, or show?
Probably, at the moment, 1984, George Orwell. Is that sci-fi?
Yeah, totally it's sci-fi. It's a timeless classic with so many hidden gems of wisdom that apply to the modern age. Well, that's it, folks. Thank you to our very first guest, Mr. Andrew Gillick. Don't forget, Andrew's 2 reports are available for download from bravenewcoin.com. We'll put the links in the show notes. Thank you very much for listening. This was the Crypto Conversation for Brave New Coin.